I'm here to give you 4 main I's right now that will put money in your pocket immediately and save you 10 or 20 years. So, the first I, and these are all going to be win then play for the rest of the time. I hope I'm done giving the bad news. I'll just give good news that helps you out. And if I give bad news, I'll make fun of it. Is that fair? Okay, so the first I, and I guess it could be a T if you're not from the United States, but it's the IRS, or tax. 93% of the business owners that we've talked to since 2011, 93% are overpaying on their tax. They're unintentionally tipping the government. Now, I'm sure you're happy with what they're doing with the money. But maybe you could do something better. So I'll give you just a quick insight on the framework of that. The first piece is, these are the obvious pieces, and then I'm going to get to the less obvious pieces that really make a big difference. The first piece is, you have to have a tax team. So that team consists of up to 4 people. Number 1 is someone that's just good with record keeping. It could be a bookkeeper, a controller, or a CFO, depending on the size of your organization. The second one is a tax strategist. A tax strategist may or may not be a CPA. Some CPAs are historians, and they're just looking at the data, and they're having you pay tax on previous data. I need someone that looks forward with you and starts to develop a strategy that could be implemented. Oh, thank you. And I'll give you some really cool ways to do that, by the way, so that you can practically implement that. The third piece is an attorney. That attorney may be a corporate attorney, or it may be a tax attorney. But the attorney will likely save you more money than the tax strategist, and I'll get into that once again in a minute. The fourth person, does anyone own a brick and mortar building here? If you own a brick and mortar building, the fourth one is an option for you. It's an engineer, specifically a cost segregation engineer. Cost segregation allows you to accelerate the tax depreciation on the building so that you'll save a bunch more money, okay? So up to 4 people on the team. Now, you want to meet with this team at least quarterly. It might only be 20 minutes. The longest meeting I've ever had is an hour. And I found like some with a personality on that team so I can tease and joke with them. Like the first time I had the tax strategist on the meeting, I said, hey, you know the difference between an introverted CPA and an extroverted CPA? And he's like, no, what? I'm like, well, when an introverted CPA talks to me, you know, they look at their shoes. When the extroverted CPA talks to me, they look at my shoes. Yeah. That's as good as the jokes get, folks. You know. So, that's the team, but you meet with them quarterly, and this is what that conversation sounds like. That meeting, there's no one that's going to say what you do on the meeting is illegal or illegal. So it's your job to think outside of the box and be an entrepreneur on that. You're going to ask a ton of questions like, hey, tell me the coolest strategy you've done for someone in the last while, like since we spoke last. Are there any new tax changes that impact me? Now that we have the new Trump tax plan, is 199A something that I need to be aware of? Are there additional deductions I could take? And then my favorite thing to do is just look at my life and ask questions that I know they would normally say, you can't write that off, and think of ways to write it off. So I go, hey, we rented a villa in Italy, and we're going to go spend a couple months there. Can I write that off? And then they laugh, and I go, no, I'm serious. Like, let's talk about how we could write this trip off. Number 1, you can actually do an annual corporate compliance meeting anywhere you want, and I think better in Italy. So we go there. Then I said, well, I'm going to go see where my family's from and get some footage there because I'm bringing my camera guy with me. And I'm actually going to do a one-day mastermind since I'll be out there for 60 days for our inner circle. So I just go through it. By the end of the call, we wrote off 55% of a trip. Simply because I brainstormed, and their job is to tell me legal or not legal, and I choose the legal path. But I have to ask the questions because they're not necessarily thinking that way, right? Now, the other secret to this is you want to go back 3 years in your returns and see if you missed anything because you can amend your returns. When my partners died and things were chaotic, I didn't meet with my accountants and tax team. I just tried to keep everything together. Well, 2 years later, when things settled down, I went back and looked. I had overpaid my tax $54,000, $40,000 federal, $14,000 or $15,000 on the state, and I was able to go back and amend and get that money back. Okay, so you want to get a different set of eyes, a different tax strategist every 3 years to go back. And this year, we did just that. We weren't able to go back, but we were able to create new tax strategy for next year. So it's really great because sometimes they just get used to you. You get used to them, and there's a really comfortable relationship. And someone else comes in trying to prove themselves, and they start asking and thinking a little bit differently, and it opens up the world. And I tell them, I'll pay your hourly fee for this call, but I'll double it if you find something. That's what I tell them. So that's the first leg of tax. There's 2 more legs that we're going to go through.